masterclass in mechanical precision.
It really is.
What we have in front of us, their actual order tickets and charting interfaces, they map out exactly how risk is managed on this micro scale to produce these, massive macro level returns.
And looking at these terminal screens, I mean, I'm not seeing long-term investment portfolios or, broad economic theories.
Definitely not.
I'm seeing surgical, down to the tick parameters. It literally looks like high-frequency combat.
Okay, let's unpack this. We aren't just looking at random stocks here, are we? I mean, this is a very specific, highly leveraged playground.
Yeah, very specific. We are looking at a specific S&P 500 weekly put option.
Wait, the weeklies?
Yep, the weeklies. For those of you tracking the exact string, it's the .SPXW contract.
Got it.
And weekly options, I mean, they are incredibly fast-moving instruments. They decay quickly, and they react violently to just tiny shifts in the underlying index.
Oh, they're volatile.
Extremely. The screenshots we're analyzing today, they don't just show us general market trends, they're exposing the exact parameters where a trader decides to, enter a position.
Right, like the exact dollar amount where they'll take their profit.
Exactly. And perhaps most critically, the exact fraction of a point where they will cut their losses and just walk away. It's basically the ultimate battlefield map. But before we look at the actual order tickets, the actual pulling of the trigger, we really have to understand the terrain first.
Yeah, the macro structure is key here.
Right. Because in the equity charts provided in our sources, there is a very clear overarching market structure. If you look at the interface, the current market price, at least at the time of the setup, it's hovering right in that 7219.9 to 7220.5 zone.
Right in the middle of that range, yeah.
But the chart is aggressively highlighting a level much higher up. I mean, it explicitly identifies a massive line in the sand. It calls it the 7275 determined breakdown signal.
Yes, the 7275 level.
And the methodology basically dictates that if this signal holds, the ultimate profit targets are mapped out perfectly, like way far below, down at 7215 and eventually 7190.
Well, what's fascinating here is the specific language they use in their internal markup.
You mean the determined breakdown part?
Exactly, determined breakdown. In this methodology, a level like 7275
isn't just a suggestion. And it isn't just a psychological round number, like a clean 7,300 would be.
Right. It's not just a big round number people like to look at.
No, it is a structural pivot point. The charts also mention a level just beneath it at 7273, and they describe it as an ATH offer.
Consideration acceptance zone.
ATH, meaning all-time high.
Right, all-time high.
So the market is essentially probing uncharted territory there.
Yeah, the market is constantly testing that dense ceiling. It pushes up to 7273, offering new prices. Buyers and sellers consider those prices, and they either accept them, which pushes the price higher, or they reject them.
Okay, I see.
And that 7275 determined breakdown signal is the ultimate ceiling of that consideration phase. It dictates the structural direction of the market.
So if it rejects it?
If price approaches that zone and fails to break through, like if it breaks down from that determined point, a vacuum essentially opens up beneath it.
Oh, wow.
Yeah, exposing those much lower targets you mentioned at 7215 and 7190.
I picture that 7275 level like a laser tripwire in one of those elaborate heist movies. The jewel thief is dropping from the ceiling, surrounded by this invisible grid of lasers.
That's a great way to visualize it, actually.
Right. And once that specific 7275 beam is crossed, or in this case, structurally rejected, it triggers a very specific automated sequence of events. The vault locks, the alarm sound, and the market just drops into that vacuum you mentioned.
Yep, the sequence is locked in.
But let me push back on this a little bit.
Sure, go ahead.
Is it really that clean in practice? I mean, markets are inherently chaotic. They spike, they drop, they fake out all the time. How do we know from these charts that 7275 isn't just a false alarm?
Well, the EquiDee methodology doesn't assume the tripwire is infallible. Actually, it assumes the exact opposite.
Oh, really?
Yeah, it operates on the absolute certainty that false alarms will happen, and it builds a structural shield to protect capital when they inevitably do.
Okay, so it expects the chaos.
Exactly. And this is where we transition from the macro theory of the chart into the micro reality of the actual execution.
Yeah.
Throughout these screenshots, you see repeated highlights of a 25 tick risk invalidation point.
Yes, with that specific instruction to enter close to here.
Right.
Which brings us to the first limit order screen in the sources. This is where, the theory becomes real money. We see an order to buy 100 units at a limit price of 7,242.0.
Yep, 702.42 even.
And the take profit is set way up at 7273.0, which is exactly that all-time high consideration level we just talked about.
Which is a massive move.
Yeah, that represents a 310 tick reward. But the stop loss is the real story here, isn't it? It's placed at exactly 7,239.5.
Right, which is so tight.
That is just a 25 tick risk. So you are risking 25 ticks to make 310 ticks. The interface calculates that out. For us, it's a risk to reward ratio of 12.4.
And a 12.4 risk to reward ratio, I mean, it completely warps the traditional mathematics of trading. Well, for every 1 unit of risk you take, you are aiming for 12.4 units of return. You do not need a high win rate to be profoundly profitable with that kind of asymmetry.
That makes sense.
But to truly grasp this, we really need to understand the physical scale of a tick in this context.
Right. What is a tick here? Like a fraction of a point.
Exactly. In S&P index options, a tick is generally a fraction of a point, often 0.05 or 0.1 points, depending on the specific derivative structure.
Okay.
So a 25 tick risk essentially means